looking at previous recessions over the last few cycles going back to 1990. And for many of you, and if you're if you're under the age of 34, you've probably never experienced a real recession, except the brief one we had at the beginning of COVID. And that was a little bit different because it was short. It was, real quick. And of course, we know what the Fed did after that and what that did to the economy. But, what we can learn from past recessions, and I'll publish the link to this article in the live stream, where I'll have the team do it in a moment. But the stocks, they may rise entering into a recession, but they almost always decline during a recession. Stocks tend to rise before the recession ends, right? So usually that's at peak fear, which is really interesting because we're at pretty deep fear right now. The degree to which stocks fall during a recession is affected by how long it lasts, its severity, and the valuation of stocks when it began. And some of the best days in the stock market occur during a bear market. Now, by far, the worst that anybody who might be alive today experienced was during the Great Depression, when after peaking, stocks fell like 50% or just under 50% in a couple of months. And then, of course, the total loss going out to early 1930s was almost 90%, and it took like 25 years to recover. Nothing like that has happened since. I don't think that's going to happen or anything close to it this time. I think stocks are traditionally undervalued today versus where they've been similarly valued during past downturns. So that's encouraging. And I think, as I said, real inflation is much, much higher than the current interest rates would have us believe, which means that relative to the opportunities, the cost of capital is still relatively low.